Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, we're going to talk about credit, the new era of credit, Fintech Banks, what you're going to have to do if you want to be involved with credit in your future. It's going to possibly happen. In fact, no, it's really going to happen. What your investments hold, how much money you have, going to be used to secure your credit. That's right. We're going to talk about it today. And in the background, what do you see? You don't know. It's an office. But this is one of the Opus virtual offices. This is where the Stop Struggling Now LLC location is. If you have a residential address, you want to start your business, then use the link down below to get the Opus virtual office. And welcome to Foci Optics. Check. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. Welcome back. Today I'm excited again because we're trying to get you to be emerging millionaires. Financial Fridays. As you can see, we're on the Stop Struggling Now YouTube channel page. Thank you for being here. Please share these videos because you can help other people out. Let's talk about the join button over here on the right. As you know, this is a membership button, the support button for Stop Struggling Now. I send special messages to the community tab here just for members of the channel. I do 1 or 2 videos a month also just for members of the channel. And you get special emojis. You have special icons next to your name as well. So you'll know who they are when we do a live stream. So let's, without further ado, we're going to talk about credit, the new credit. Everybody knows about New Coast Direct, My Jewelers Club, Ox Publishing, Hutton Chase, secured cards like Discover, Open Sky, how to get your credit score up. But that's based on a FICO. That's based on the credit bureaus. That's based on America, the banking system, utilizing their leverage to make sure that the lower your credit score is, the more interest that you're going to pay. How is that even a fair environment where the guy that's giving you a loan has vested interest to make sure your credit score is low? That doesn't seem quite fair, does it? It's about time somebody comes up with something new, and the fintech banks are trying to do a new paradigm shift. Just like when the internet came out, just like when Amazon came out, eBay came out, PayPal came out, in the 90s, and people were like, oh no, this will never work. Yes, the infrastructure was not in place like it is today, so it seemed like it would never work. But thanks to Musk and the pioneers before, they said, you know what, I don't really care. We're going to make this happen. I'm a geek. Let's see if we can make it happen. In fact, I can see the future. This is going to be big time. So now you have a situation where you could be in the big time. You could be with everybody else. But before we get into this fintech, I'm going to talk about DCU because I haven't talked about them in a while. DCU Credit Union. You can earn 6% on your money annually up to $1,000. Do you hear me correctly? 6% on your savings account at DCU. If you want to get a referral link to join DCU, please send me a message at eric@stopstrugglingnow.com. And I'll send you a referral. I need your first name, your last name, and an email address so then I can go here and send you a referral. So you might be saying you could have a minimum of $5 in the account, it's going to earn 6%. You could have $1,000 in the account, that's going to earn 6%. If you keep the money in there the full year, the APY yearly is 6.17% because it compounds monthly. Now, some might say, what happens after I go over 1,000? Well, if you go over 1,000, which means 1,001 and up, that dollar And anything above 1,000 is going to earn 0.25% on your money. So there you have it. There's an easy way to earn a high interest. And if you have this is a savings account. If you open up a checking account, they will send you a debit card. If not, you don't have to have a debit card. But anyhow, that's how we're going to start this off. And if you want to boost your credit score up, and you want the New Coast, the My Jewelers, the Ox Publishing, Hutton Chase, Discover, I'll have links down below in the description so you can go there to boost your score up the old-fashioned way is what I'm going to call it from now on. All right? Now, since it's Financial Fridays, we got to talk about this free stock. Come on. Everybody. Anybody and everybody should download the Webull and Robinhood app. I have the links down below. What's wrong with getting a free share of stock when all you have to do is verify your email address and link a bank account? That's it. You don't have to deposit. And then in 7 to 10 days, they're going to give you a free share of stock. Whether it's Robinhood or Webull, you should sign up with both. There's no reason you should not. Now, Webull free share of stock is going to expire August 31st. They may bring it back later, but for right now, it's going to expire August 31st. So you got to get in with that free share of stock just for signing up. After August 31st, which is how they're giving you the second share of stock right now, you have to deposit $100 or more in your Webull account, and that's how you're going to get a second share of stock. And after August 31st, they plan on giving you only one free share of stock when you put in $100 or more. All right? So now is the time. Stop delaying. The stock market is not gambling. It's not any of this nonsense people keep talking about. Again, the top 10% of the wealthiest people in America own 90% of the stock market. I want to play in their casino too. You should too. So what if it goes down? Buy more. 1%ers don't lose. They're doing this on purpose, everybody. Come on. Now, Robinhood, as you can see right here, again, I'll have a link down below. Open an account, get a free share of stock. There's not much to it here. So without further ado, let's get into this fintechs. You don't know that you've been dealing with fintechs all along. You know when you have Square Capital, you have a Square point of sale system, payment system, you're able to accept payments. Well, you know there's Square Capital. It's based on how much revenue you have coming through your account. They will give you a loan. Simple, no credit required, no credit check, no nothing. They'll say, okay, he has $10,000 a month coming in. We can give the man $5,000 loan. No problem. We're just going to take some of the money that comes in and we'll pay ourselves back. How about that? Good? Good. Fintech, PayPal does the same thing. So don't be confused. PayPal's the same thing when they have their PayPal business loan or capital loans. They do the same thing. They say, hey, this guy has $100,000 coming through. We can give him a $15,000 loan. We're going to take out, you pick, 15%, 20, 25% for every payment that comes in. So as an example, PayPal does this right now. If you use PayPal and you have money coming in, you can get a PayPal business loan and then say, hey, you know what? Take off 15%. That's what you're going to take out. They're going to charge you a higher fee for the lower percentage, but so what? Let's say the lowest percentage, 15%. You have $1,000 come in for a payment. They're going to take $150. They leave $850 in your account. That's how you pay them back. It's not going to be based on your credit. It's not based on where you live, not based on your background. So it's based on your revenues coming in. And what have I been saying all year for the last 2 years? Monetize yourself. Get your streams of income. Fintech banks are going to start trying to act like if you have $100,000 sitting in a bank. That's what they're going to act like. That's what they're going to do. How many of you have went to a bank like a Chase Bank and you see that private lending door? That's right. Those are for people who have $200,000, $300,000, $400,000 sitting in their bank. Those are the people that have those credit limits that you want to hear about. $50,000, $75,000. They can get to go to the back and talk privately. Why? Because we have $200,000 sitting in their bank. I go in there and say, hey, can I get a $30,000 loan for 30 days for free for 0% interest? They go, why not? I just want to go out here and buy some land real quick and then flip it. Why not? 1%ers don't lose. But ordinary citizens who are scraping by every day, where 70% of the population doesn't even have $1,000 in their bank account, they're not treating you the same way. It's not a level playing field. You're out here thinking this is all fair. America's not fair. America only gives you an opportunity to be better than you have been yesterday. But they're not giving you no opportunity to say, hey, you're going to be treated like a millionaire. You're not going to be treated like a 10%er. You have to earn that. You got to put in the work. So today we're going with the Tomo. I'm going to call this the Tomorrow Card. The reason why I'm calling it the Tomorrow Card, and they're going to call themselves the Tomorrow Card as well, is because guess what? We will never pull your credit. What does it say right there? Get pre-approved today to see if you're eligible. Just enter in your email address. That's right, ladies and gentlemen. There's a link down below. Go get that Tomo link down below and go see if you can apply and see what your email address tells them. No interest, no fees, no credit history check, and earn up to 2% cash back. Those are lofty goals for a company that's just now coming out, Fintech. They're going to change the banking environment. They're sitting there saying, hey, you know what? Why isn't the rest of the population able to get loans based on how much money they have coming in to their account or how much money they have in their account? So what if a person only has $800 in their account? Shouldn't they be eligible to say maybe get a loan for $200, $100, a credit card, and then help their credit out too? Why not, right? Wouldn't that make sense? They're trying to be like your own little private banker for the ordinary citizens, in case you're not a top 10%er. See how this is going to work? The fintechs, the geeks, they've been working pretty hard thinking up something, and I love it. Look at here. Credit limit 100 to 10,000. Interest rate APR none. Fees none. Cashback 1 to 2%. Minimum credit score, there is no credit score. Look at here, they're reiterating it again. Fees, no credit check to apply, up to 10,000 credit limit. We approach credit differently. I agree. Credit system outbroken, outdated. And then basically they're going to be a fintech. So hopefully whoever is backing them is going to have the necessary funds to be able to fund the credit. And I'm pretty sure they're going to have somebody backing them. Oxygen Bank, they have, I don't know what's going on with them. They came out talking about they're going to give business lines of credit, business credit. They didn't anticipate they were going to have thousands of people signing up. And then all of a sudden they're kind of like, well, wait a minute, let me take this off the website. We're having people that want to sign up and get an account, personal account, and a business account. It took me a month, 3 weeks to a month to sign up. And then they sent me something talking about, nah, well, we maybe can't sign you up, whatever. I'm like, okay, whatever. That's Oxygen. They were trying to do same thing. They were talking a good game. But anyhow, I still have the Oxygen link down below because you can still sign up with Oxygen for a personal account. And some of you might get approved for a business account. I don't know about the business credit that they were touting for the last 2 years that's going to happen. They're going to have to get funding apparently to cover that. So anyhow, Tomo, they're already in place. They're trying to do it, and use that link down below and get in on the beta access. Get in early, ladies and gentlemen, because if you were in early on PayPal, Tesla, Amazon, Square, in the stock market, you'd be millionaires today, or hundreds of thousands of heirs today. You'd be doing pretty good today. Same thing's going to happen with these guys, in my opinion, because this is going to be the future. So this is one fintech that we're going to talk about. Next up, BREX. They're the next one. And again, I'm not going to get deep into these because they'd have to be their own video. But again, see what they're doing? Unlimited points, no annual or hidden fees, fraud protection, see if you qualify. Once again, this is based on high earning net individuals. Once again, you can see Sophie over here. Startup, Flexport, Landing AI. This is almost a business card, also an ordinary account, but you have to deposit $5,000. High net worth individuals, top 10%ers basically. You make about $70,000 a year or more, this is your go-to spot right here. And you get that special private banking kind of treatment. You understand what I'm saying? Do you see all this? They give you cash back for using your card, unlimited free wire transfers, integrates with QuickBooks. There's a myriad of things that they can help you with. And once again, this is another company that's trying to make things happen. And I'm calling them FinTech as well. Financial Technical Company. That's what I'm calling them. So there's a BREX. There'll be a link down below to sign up for BREX. All right? CreditAI is going to be off the charts if they can pull this off. Apply right now for your beta access. This is going to be the same type of thing. You see this? Your new metal card is so fired up. They're calling it the unicorn. That's why you see this unicorn up here. CreditAI. I'll have a link down below. And again, never pay fees or interest. Never overspend. Bill credit automatically. Spend your paycheck early. Cutting edge technology. Giving credit where credit is due. The metal unicorn card is a real credit card. Your balances to optimize your credit utilization. I'm not going to read the whole thing. You guys go check this out. Apply to get in the beta access. That's all you can do. Get in on the ground floor. Prepare yourself while you're getting your streams of income. While you're making money, because when these things pop off down the road, whether it's CreditAI, whether it's BREX, whether it's anybody else that's a fintech, you want to be in position to have the revenue coming in. And if you do need a loan, you want to be able to walk in or send them a message and say, hey, I want $50,000. I want $100,000. Can you give it to me? And then they say, yeah, we'll give it to you. No interest, no nothing, based on the monies that you have coming in or the monies you have in your account. I like their little, imagine if Tony Stark built a bank. I like how they do their promos. All right, so anyhow, let's talk about it. Find out yourself. Go to these places. This is what you do. When you want to be financially independent, you try to find out as much information and you do your own research. You don't listen to me. Don't listen to anyone else. You can go over here and learn yourself. You are smarter than you think, especially when it comes to money. All right? Who's up next? Unify Money. Once again, a lot of you don't know about when you have a account, let's call it at Robinhood or Webull, because that's what we're talking about, links down below. You have money sitting in your Robinhood and Webull, and let's just say it's $100,000. And you're investing this money. Now you're understanding why the top 10%ers invest. Because if you knew that the money that you're investing and then that interest that you're earning on your money, that you can use that down the road, if you knew that, then you would have been investing since you were born. So if you knew that if your Robinhood or Webull account held like $100,000, $200,000 in there, and you decided that you had margin accounts in there, which is almost like credit to buy stock, and you had this $150,000, $200,000 in there, and then you said, I want to buy a house. The guy said, okay, Eric, no problem. You want that $300,000 house? We need $60,000. What if you knew that you could take some of that money out of your account, your margins, and then turn it into your down payment for the house? You didn't know you could do that, I'm sure, a lot of you. Now keep in mind, your account is still earning dividends, still earning when the stock prices go up. The only downfall to that scenario is if there's a drop like what happened in March in the prices, and the brokerage says, hey man, you got to cover some of this money. That's the only risk that you would be taking. But if you have such a big cushion, let's say you had 600,000 and all you needed was 60, that's a big cushion. Well, again, your stocks, you're still earning dividends, you're still getting the appreciation on the stock rise, even though you took some of the money out. You're just going to have to replace it, right? That's simple. Make sure you have your streams of income, ladies and gentlemen. Or let's face it, you can use your own account to replace it if you need it. But the point I'm trying to make is this is what Unify Money and a whole bunch of other companies are going to start trying to do. They're going to start using your investment portfolio to give you lines of credit, credit cards. This is going to be something new. So once again, noticed up here, request access, get in on the ground floor. Hybrid checking and saving account, Unify Money. A link will be down below. You're going to earn. This means you don't need to worry about leaving money in your checking account or underperforming savings account, and all your money is working hard for you all the time. Once again, look at what they're trying to do here. The money you have invested, they're going to use to possibly give you a card and give you lines of credit. You can see it here. Effortlessly build your long-term investment portfolio and trade for free. We already have that with Robinhood and Webull. And quite frankly, I'm surprised that Robinhood and Webull, one of them, have not been contacted by a fintech, because this is going to be the playbook of the future, in my opinion. So this is why you should be investing if you can, instead of worrying about what else is going to happen to your credit. Making money. Look at here. Visa Signature Credit Card. Maximum returns on your spend with cash back invested into your investment portfolio. What did I tell you? They're using the same playbook. This is all coming down, ladies and gentlemen. This also means that the stock market, in theory, should continue to be going up, because people are going to be putting their money into investment accounts and brokerage accounts. More people will be doing this once they realize I can get credit by investing. It's a win-win. And it also wins for the one percenters because it's their companies. Just what's happening right now with Apple, Tesla, Microsoft, Amazon. Okay, just for a few examples. But there's more than that. All right? Financial Fridays, ladies and gentlemen. Value-added services, you guys go to Unify. Now, another fintech that's going to be interesting as well. The first ones I mentioned, okay. These, they're trying to do something different. H.M. Bradley, they're sitting here trying to give you 3% APY. This is going to be very interesting. They've been talked about, but again, they're talking about build up your interest. They're trying to get you to save 20% of your direct deposit. So if you have a direct deposit of $500, they want you to save 20% of it, and they have these things called tiers. So the first tier is 1%. So every quarter, you can, long as you keep 20% of your direct deposit in their account or in your account, then they move you up to the 3%. All right? It's pretty simple. It's not crazy. Here you go right here. Save at least 20%. You're in tier 1, so you get 3% APY. If you only save 15% or leave 15% in your account a month, then you only get 2%. And if you only leave and save 5%, you only get 0.5%. So it's up to you what you want to save. And once again, they're going to turn your savings, your secured deposit, as we're going to call it. Now you're getting higher than average interest on your money. And then they can turn that into loaning you money. That can also turn into where you'll have a Visa card or a MasterCard. And once again, simplify your banking with one account. And notice here, once again, they start talking about plans. You can go look it up. I'll have a link down below. You can see their rewards-based habits. Once again, hmbradley.com for everybody on podcast. What's up next? Now, Wealthfront. This right here is a little different. Wealthfront, it does banking, it does investing, but Wealthfront is almost like Credit Karma. They're actually trying to give you tips on how to invest your money. They're trying to give you tips on the ratio of where you should invest your money, such as United States stock market, a foreign stock exchange, emerging markets somewhere, How much money you should have in crypto could be something. So you can see here your plans. Can you buy a home? And then they give you this formula that says, just as you can see here in this picture, enough for 20% down. Then they'll tell you how much you need. You want to try to get 2.9 million? Then they'll tell you what you have to do for early retirement. You can see this is a Wealthfront. All you have to do is go to wealthfront.com, and you can scroll about and you can see how they're trying to help people be a little bit more financially literate. This is what we're all about here at Stop Struggling Now, because the more literate you are, that means the more money you can make in the long run. Think of it just like education at a school. When you go to school, high school diploma, okay. College diploma, okay. Go back to college and get a PhD, become something special. Now you're probably going to make more money in your future than just having a regular degree. All right? So it's the same way here. Financials, you might know to put your money in a bank. You might know that when you put the money in your savings account and you earn 3%, you know that. But they're saying, hey, but do you know if you invested money and you actually had a couple $100,000 over here, we would give you unsecured money used against your deposit anyhow. Nobody says that, right? That's what I'm talking about. So now you're thinking, okay, how do I get to $2 million by the time I'm 40? You can figure it out. They're just basically trying to give you tools and information to help you be financially literate. And I can't say nothing bad about that. They're new as well, wealthfront.com. I'll have a link down below. And that's it, ladies and gentlemen. As you can see, I still do vacation rentals. People are still traveling. I don't know why. And if you do vacation rentals, this has nothing to do with it, and you're doing Airbnb. If you have something in the Arizona area, you go to the Phoenix Vacation Rental Homes. And when you submit your email to sign up, tell John that Eric sent you. All right? And you can list your homes in Arizona here. And this is how we have streams of income, ladies and gentlemen, because he has the website. I sit here, wait for messages from people who want to go on vacation in Arizona. And then I can respond with, yes, I have it available. This is how much it costs. They send the money via PayPal. That's right. PayPal. I make my own money, my own amounts. PayPal gets their 2.3 or whatever percent they get. I don't really care. But the money is in my bank account next day. So you can't get any better than that. So there you go. That's a little side tip for your streams of income. So if you have a timeshare, if you have a home or a cabin or a trailer or anything that you can rent in Arizona, PhoenixVacationRentalHomes.com. And I'm in partnership with them for, I don't even know, 5-6 years. But anyhow, that's it, ladies and gentlemen. I tried to make this short and sweet, but this could be very powerful. This can change your life. So please share with other people. Thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. That's why monetizing yourself, streams of income, you start now. If you haven't already started, you start now because it's a slow build up. There's a lot of people out of work right now. There's a lot of people looking for extra streams of income. So now there's more competition. So now you have to get on all platforms and start out. You'll have one subscriber just like I did 2 years ago. You'll have one like, one comment on any platform. That's how it starts, and you have to be consistent. You have to be like every other day, every 2 or 3 days, every day if necessary, to build up an audience, build up a platform, build up followers, build up people that might be like-minded, and then you can monetize yourself. And I always suggest helping other people. All right? So with all that said, keep your head up, keep moving, and I'm out.